When the gold market is good, it's a great time to be hitting record levels of production. And lucky for Aris Mining, they've managed to do this while announcing their fourth quarter financial results on a day when the spot price of gold continues to hit new highs as we inch closer to the $3,000 an ounce mark. And on top of that, expansion of two key assets continue to push forward, with commissioning of one expansion set to begin in the second quarter of this year. Guys, we're talking quarterly earnings, we're talking Aris Mining. Let's dive in. Aris Mining in the fourth quarter reported top-line revenue of $151 million, which was a 21% increase from the $125 million in revenue recorded in Q4 of 2023. This increase was despite total ounces sold declining from 62,000 to 56, which includes both owner mining and contract mining figures. The average realized gold price, meanwhile, improved from $1,980 to $2,642, a 33% jump that helped to cover the sales gap, while giving the illusion of improved performance. This improved pricing on gold naturally assisted Aris with improving its financial position overall, with the company moving from a net loss of $5.9 million or 4 cents per share last year to record net income of $22 million or 13 cents per share this year in the fourth quarter. On an adjusted basis, net earnings improved from $11.8 million or 9 cents per share in Q4 of 2023 to $24.7 million or 14 cents per share in Q4. Adjusted EBITDA, meanwhile, moved from $39.7 million to $55.6. For the full fiscal year, revenue improved from $448 million in 2023 to $511 in 2024, which was again off the back of improved metals pricing despite lower ounces sold on a year-over-year basis, with 2024 sales coming in at 211,000 ounces versus 225,000 ounces in 2023, a 6% decline. Average realized gold prices comparatively moved from $1,933 to $2,378 an ounce, a 23% improvement. Net earnings improved by a whopping 116% on a year-over-year basis, jumping from $11 million or 8 cents per share in 2023 to that of $25 million or 16 cents per share in 2024. Although you wouldn't know it by reading Harris's Q4 earnings release, with the company offering up no comparable figures to 2023 for some reason. Adjusted earnings were less dramatic in their year-over-year improvement, moving from $52 million or 38 cents per share in 2023 to $56 million or 35 cents per share in 2024. Adjusted EBITDA, meanwhile, improved by just 2%, growing from $159 million to $163 million year-over-year. Aris ended 2024 with a cash balance of $253 million, with total current assets of $351 million, which is offset by current liabilities of $135. Well, financial statements are one thing, production data is another. Why? Because, well, Aris is a bit choosy about their guidance, having only provided 2024 costing guidance for the Segovia operations, alongside providing production guidance for both Segovia and the Marmato upper mine. They don't even calculate cash costs or all-in sustaining costs for Marmato because, well, it's ugly. So we'll make do with what we've got and focus on Segovia to start. Aris Mining in the fourth quarter saw 168,000 tons of ore milled at Segovia, which was essentially flat from the 166,000 ounces milled in the fourth quarter of 2023. Where things differed, however, was the average gold grades of the material process, which fell from 10.6 grams per ton to 9.8 grams per ton. As a result, production fell year over year in Q4, from 55,000 ounces to 52,000 ounces. With the falling production came a rise in costing, with the cash cost moving from $997 an ounce last year to $1,199 an ounce this year, while all-in sustaining costs moved from $1,264 to $1,485 an ounce. Of course, this rise is partially attributable to the rising cost of gold, which increases royalty costs. Production across both operations under Aris's management saw gold production as a whole decline from 61,000 ounces to 57. But Steve, you said they had record production when you opened up the video. Yeah, I'll admit it, they got me. Okay, they really got Jay who assembled the script. But who's checking? You always gotta read the fine print. The first bolded words in the Q4 earnings release were highest quarterly gold production. Turns out they were only talking about in 2024. And while Aris won't give you costing across both operations on a per ounce basis, they give you the numbers to do the math yourself. Cash costs in Q4 across both operations totaled $13.08 an ounce, while all-in sustaining costs averaged $16.08 an ounce. For the full year, Segovia saw its average gold grade decline from 10.4 grams per ton to 9.4, leading to production of 188,000 ounces of gold, as compared to 203,000 ounces in 2023. Guidance had called for production of 200 to 220,000 ounces of production. Those ounces were produced at a cash cost of $12.28 per ounce versus $928 in 2023, while all-in sustaining costs rose to $15.07 an ounce versus $11.73 last year. Revised guidance had called for cash costs to be in a range of $11.25 to $12.25 per ounce, while all-in sustaining costs were to be in a range of $1,400 to $1,500 an ounce. On a combined basis, gold production hit 211,000 ounces in 2024, meaning Marmato produced 24,000 ounces, meeting guidance. However, production was down from the 226,000 ounces produced last year. Cash costs across all operations totaled $13.46, while all-in sustaining costs hit $16.40 an ounce. So how's 2025 shaping up so far? Well, Aris is calling for Segovia to produce 210 to 250,000 ounces, which represents a production increase on a midpoint basis. Marmato, meanwhile, is expected to produce between 20 and 25,000 ounces. In terms of costing, Aris has again only provided cost guidance for Segovia, and that guidance only applies to owner mining and excludes third-party mill feed. Cash costs here are slated to be between $10.50 and $11.50 an ounce, while all-in sustaining costs are expected to be between $14.50 and $1,600 an ounce. Costing guidance for Marmato is expected to resume when the lower mine achieves commercial production, which is currently earmarked for 2026. An expansion at Segovia is also said to be on track, with the expanded processing facility expected to be commissioned next quarter. Well, an assessment has been completed to potentially expand the Marmato lower mine from the initial 4,000 tons per day to 5,000 tons per day, which represents a 25% increase in size. Construction, meanwhile, is expected to cost $290 million at the mine, which is inclusive of this scope change. And a production ramp at the lower mine is currently scheduled for the second half of 2026. All right, so let's wrap it up. If there's a lesson here, it's always read the fine print and between the lines. Aris elected to provide 2023 figures as a reference point for how their operations are doing on a year-over-year basis. There's a reason for that. Well, the news release talks of growth quarter over quarter and record figures for the year. Well, things aren't quite as good as they seem. That being said, they're still making money and they're still growing with 2 expansion projects underway and have cash on the balance sheet. So they really aren't doing half bad overall. All right, guys, I'm almost done my vacation week here filming videos for you guys because I know most of you guys can't get enough. I don't know what's wrong with you guys who love these mining earnings breakdowns, but I love you guys for all the comments and likes and shares we're getting. So we really appreciate that. And we're going to continue to be delivering for you guys. I'll be back in the studio next week, bringing the heat. All right, everybody. Thanks for watching.